Hey everyone, and welcome to your go-to source for all things finance. Today, we're kicking off the day with some huge headlines that are shaking up Wall Street. Stock futures are trading a little lower right now, but don't let that fool you. We've seen some incredible record highs lately. We're breaking down the latest inflation numbers, which are keeping the Federal Reserve on their toes. Plus, there's a massive legal showdown happening right now that could impact the Fed's independence, and we're getting a fresh look at the ups and downs of the AI market. This is a day packed with critical news, so let's get right into it. First up, let's talk about the economy. We just got the latest read on inflation, and it's definitely the talk of the town. The Federal Reserve's preferred inflation gauge, known as core PCE, came in right where most experts expected, showing prices rising about 2.9% over the past year. Now, while that's in line with forecasts, it's still above the Fed's target of 2%. Remember, the Fed wants to see inflation cooling down to that 2% mark. So, what does this mean for your money? Well, it tells us that even though inflation isn't completely tamed, it's also not getting significantly worse. This is a delicate balance for the Fed as they decide what to do next with interest rates. Speaking of interest rates, all eyes are on the Fed's next meeting in September. There's a strong belief on Wall Street that we could see a rate cut coming very soon. In fact, markets are currently betting on about a 90% chance of a 0.25% rate cut in September. That's a significant indicator of what investors expect. Even a prominent figure on the Federal Reserve Board has publicly stated they'd support a cut in September and potentially more cuts over the next few months. This optimism comes despite some strong numbers we're seeing in personal income and spending. But here's the kicker. The biggest factor for the Fed's decision might not be inflation, but actually the job market. We've seen some big revisions to job growth numbers recently, and they were pointing downwards. That means the Fed is increasingly concerned about potential risks to the job market. So, the upcoming August jobs report, which comes out on September 5th, could be the ultimate decider for whether we get that September rate cut. If that report shows a weaker job market, it could sway the Fed even more towards lowering rates to keep the economy moving. We'll also get another look at a different inflation measure, the CPI, a few days later, but for now, the jobs report is key. Now, let's switch gears to a story that's causing quite a stir, a major legal battle involving a top Federal Reserve official. Right now, as we speak, a federal court is holding a hearing about the potential removal of Federal Reserve Governor Lisa Cook. This is a huge deal because it involves serious accusations and a lawsuit against a sitting Fed governor. The director of a federal housing agency has filed a second criminal referral against Governor Cook, making allegations of mortgage fraud. These are serious claims, and President Trump is actively trying to oust her from her position. But Governor Cook isn't going down without a fight. She has sued the president to block him from firing her, and her lawyers are arguing that his attempt to remove her is illegal. On the other side, the president has asked the judge to deny her request to stay in her role. This is more than just a typical legal squabble. It raises crucial questions about the independence of the Federal Reserve. For the Fed to effectively manage our economy, it's vital that its officials can make decisions free from political pressure. What's likely to happen today? Well, legal experts believe that Governor Cook will likely win a temporary injunction, which means she would be allowed to remain on the Fed board and participate in their meetings until further notice. The big reason? There haven't been any official proceedings, hearings, or court findings proving she did anything wrong. So without concrete evidence of a law being broken, it's tough for the administration to force her out. This initial victory for Cook would probably send the case into kind of a legal limbo, likely heading all the way to the Supreme Court. It's a situation that could create some noise in the markets, especially regarding the Fed's credibility, but for now, it's not expected to change the overall direction of the Fed's policy. We're watching this closely because it's a story with big implications for the future of our financial system. Okay, let's move on to something that's been driving a lot of excitement and some recent disappointment in the markets, the AI or artificial intelligence trade. For months now, AI has been fueling incredible rallies in tech stocks, with companies promising huge growth driven by AI demand. But this morning, we're seeing a bit of a reality check. Marvell Technology, a major chip maker, saw its shares slump significantly after reporting its latest quarterly results. Their revenue forecast fell below expectations, And their data center business, which is a big part of the AI story, delivered disappointing numbers. Even though the company announced record revenue of about $2 billion, which they say was driven by AI chip demand, the future outlook disappointed investors. It just goes to show that not every company in the AI space is seeing explosive, nonstop growth. And Marvell isn't alone. Dell, another big name in the tech world, also saw its shares fall today. They reported fewer sales of AI servers compared to last quarter, and the profit margins on these powerful machines, which are crucial for running AI tools, weren't as high as analysts had hoped. These machines rely on expensive processors from companies like NVIDIA, and investors are starting to wonder about the profitability of selling these high-end AI servers. Now, does this mean the AI boom is over? Not necessarily. Wall Street analysts have been saying for a while that we'd eventually see some kind of slowdown in AI spending. However, the overall picture for AI is still incredibly strong. The industry is still forecasting anywhere from $3 to $4 trillion in AI infrastructure spending between now and the end of the decade. That's an astronomical number. And it's why the market is still largely banking on the AI trade continuing to drive growth. We're still seeing strong earnings from many companies, and with the tariff situation looking a bit clearer and those potential rate cuts on the horizon, many analysts still expect this tech rally to continue. But today's news is a reminder that even in the hottest sectors, not every company will see smooth sailing. Looking at the broader market, even with some red on the screens, Wall Street is closing out a winning month. We've actually been hitting consistent record highs over the past week, with the S&P 500 just yesterday hitting over 6,500 points. It's been an incredible run. Interestingly, this month we've seen some different sectors start to shine and catch up. Healthcare, energy, consumer discretionary, and financials have all been performing well. And among the Magnificent Seven big tech companies, Apple, Tesla, and Amazon have been making some ground and are higher for the month. But here's a note of caution for investors. September is historically known for being a more volatile and choppy month for stocks. So, while we've seen fantastic gains recently, don't be surprised if things get a little rockier as we head into next month. The big question for many investors right now is whether to buy the dip if prices pull back a bit, a strategy that has paid off multiple times recently. And finally, a quick look at some other trending tickers making headlines today. While Marvell and Dell are down, there's a winner catching eyes. Affirm shares are jumping after the buy now, pay later company smashed its fourth quarter earnings estimates and gave a really strong outlook for the future. This stock has rallied an impressive 31% this year, boosted by positive analyst commentary. As the Federal Reserve navigates inflation, economic growth, and even internal legal battles, and as the AI revolution continues to evolve, there's always something to keep an eye on. And for investors, finding that balance between growth stocks and more stable assets like bonds is always key. That's all the time we have for today's morning brief. Thank you so much for joining us and staying informed. If you found this helpful, please remember to like this video, subscribe to our channel for more breaking financial news, and hit that notification bell so you never miss an update. We'll see you next time.